All right, so we're gonna go through a quick recap of kind of what I was seeing today and was looking for, and everything, and honestly how I traded, which didn't match it at all. So, starting off, we had CPI, big day, right? So, first thing to be looking for, in terms of what we had coming into the report itself, you do have a breaker here. It's kind of set up right here, low, high, lower, low, break. Couple FVGs to go off of and everything like that, so that's all fine and dandy. But your first like PDR, especially breakers, they tend to be pretty strong in terms of what they are, so they should hold. In all honesty, they can be used really as stop loss places. So, also turtle souping the highs on the failure swings here, as well as reloading this FVG first. Now, when the news actually came out, that's your really like good sign or indication of like a hand tip in terms of the side of the curve shift. So you already have your breaker at the high to change the delivery. You then have this leg down for essentially your low risk sell. Whether it was tradable or not is up to you, but that's pretty much your low risk sell for your market maker model. So you can expect your second leg to occur and then the final one and everything like that. Especially on US 30 or Dow, same thing. Hitting the failure swings, breaker, same exact setup as ES. NQ, you had almost SMT if you really want to be that guy, but for NQ you really had more of a BPR, entry exit idea, but really the same thing. Especially if you look on NASDAQ itself, you do get actual SMT. That was just a CFD chart. Oil, it does like to move a lot on CPI. The report itself really didn't. So what I was looking for in oil was I was actually looking for bearish price action to keep going lower and have this order block hold. So what was nice is the moment that this did not hold, I basically knew that we had all this range up here was a breakaway and shouldn't have held at all. So this FEG up here, again, being a breakaway gap, I did have someone mention to me that this was a breaker. And while that is true in terms of the pattern, the way and the thing that I like to look for in price is if it needed that PD array, for example, the breaker would have gotten it immediately. Price only ran down to the bottom FEG here, and that was really the only thing it needed, so that's the only thing it went for. So if it really needed what was up here, it would have got it. Also, just in terms of the balancing of the range, you have buy side, sell side, buy side, sell side, buy side, sell side. So you have 3 and 3, so that's an even count. So then you're good. And again, turtle soups, all that stuff. So, and that's the other thing is, especially something like a breaker. Breakers should really not be touched at all, and they can just be like really good stop loss places. And especially smart money reversals as a whole, they really only will serve as the reversal itself to ultimately hold or serve as liquidity for shifting and act as a terminus in this case. So by the time this was already gone, we were bullish to go for previous day's high because we already understood that this was breakaway gap and very unlikely to hold. And the thing that I think a lot of people get trapped on is you still get reactions off that area because it's trying to offset those orders, but you know back in your mind the delivery should just change and flip back on the buy side of the curve and then keep going. So it's just like offset, keep going, and then eventually hit the terminus. What I did miss was the entire sell-off afterwards because I was way too deep in ES. As for ES itself, the RTH chart was pretty clean. You have small gap up, a push down, and then a nice trap up there just to kind of catch people almost. And then it starts to break down and everything like that. So which you can really look for, and even on like the 15-minute, just really hitting honestly a clean order block. Body's fully respected. This wick is totally fine. So you again have that market maker model idea already. So this is side of the curve for sell side. Market's trading up into an up close candle. From there you're expecting that opening or that low, depending on what you're using, to change the state of delivery in that price. So by the time you're here, you can anticipate this to be going down. And then even if not, you have second leg distribution right here with this FEG to write it down. That is where I got trapped a million. I rarely don't, in all honesty. I just did today, and it was just my own doing. You then get another FEG to continue off of to make a new low underneath this one here. You then get another, actually, FEG continue. Reloading this to make a new low under this. And then your delivery shifts and everything like underneath this low. And then your delivery shifts up and everything like that. Then you can, really do the same thing the other way up on the buy side of the curve. But again, it's the same thing. This range here should have been the continuation to keep going, and it failed. So the fact that this is already broke, you can pretty much guarantee that like these highs are going to be dead. Whether it's going to be tomorrow or not is whatever, but it really, these have no business holding. And the fact that we've already blown through that, especially on US 30, that dealing range being broke with this retracement here being traded through, and then that being broken, and then the ultimate high being broken as well, so there's no chance for like an internal run or anything like that. That breaking allows you to pretty much buy stop the rest of the range, whether you get reactions off these or not, if they're offset. It's literally the exact same logic on oil on the 50-minute if you think about it. Dealing range push down, order block not holding at all, final spot not holding, this is all breakaway, run for the high. It is literally the exact same thing, copy paste for this. So that's what I'm kind of looking for going in later in the week. But in terms of my trading, I just was not lined up and went for some very experimental stuff. And I realized it's going to be a lot more of playing what the current market is offering at that time, and just going from there and then making that happen and going behind that feeling. So, but just got to reset journal and then try again tomorrow. Also want to mention, if you guys have any video requests or anything like that, be sure to let me know. I've done a lot of ICT and just studying and things like that in general. So if anything people want clarity on, or just stuff that I've thought of myself, by all means. Other than that, be sure to like, comment, and subscribe, and I'll see you in the next video.